company founders. And this message is also for advisors to founders, giving you Candor Advisors Q2 or end of Q1 update. The way I would describe the markets right now is if you've got an A or A plus company, the markets are still green light, gas on, but we are moving a little bit back into what I would call kind of the Goldilocks kind of environment for buyers. You know, too big, too small, wrong vertical, wrong state, not the right end markets. So what's happening here is private equity firms are getting really picky, and because they control most of the money, I'm not saying there isn't plenty on the balance sheets of strategic buyers to do something, but private equity firms control a lot of deal flow, and they are really smart sheep. They cluster in a direction, they all go in that direction, they bid up the assets, they get to the point where they've moved from 6 times EBITDA to 8 times EBITDA to into the double digits. And by the time you're starting to look at 14 or 15 times EBITDA, they say that the founders need to get more realistic about valuations, not really having the ability to look at themselves in the mirror and say, oh, we bid these things up, right? So they all move in the same direction, but they're like Hollywood producers. They're all making the same movie, but they're not checking in with each other, so they don't know it. We see it because we're showing them a lot of deal flow. What's happening right now is that kind of crowd behavior, if you will, has meant that they're all going after the same kind of assets at the same time. If you have one of those assets, you're going to sell for a lot of money. And you're probably going to get to not only control valuation to a certain extent, but the terms of that valuation. So not just whether they're going to pay you 8 or 15 times your EBITDA, but how you're going to get it, how much in cash, how much in structure like earnout or rolled equity or a seller note. If you're not one of the kind of businesses that they're focused on, they're a quick no a lot of the time. And your transaction advisor is going to have to work harder in the next couple of quarters. The backdrop for a lot of that is, one, there's a lot going on in the world, all right? I don't care which part of the political spectrum you're on here, you cannot be looking at the changed world order here and think that it's full speed ahead for everybody. So there is some concern that if inflation is ticking up, then interest rates will follow. If that happens, that changes the trajectory of private equity and buyouts. So then that slows down deal activity and it reduces multiples. A poor stock market, which we've had so far this year, also, even though private market multiples can stay where they are or even go up, when the stock market is down or flat, at a certain point, they come back together, they coalesce. The other factors that are happening, private credit. A lot of private credit has been funneled into startups, AI, software, lots and lots of things that when fundraising was good, it was easy for them to keep up to date on making their payments. But a lot of those are starting to default, which means a lot of the big private credit firms are starting to have some balance sheet problems. That's happening at the same time the big private equity firms are having a hard time selling some of the assets that they had planned to sell in order to recycle that capital, to give it back to their limited partners, and then raise new funds, right? So you've got this logjam of sales happening. You got really picky private equity investors, and you've got really scared private credit investors who are getting hit with redemptions at the same time. So, not saying this is exactly thread the needle time, but what I will say is if this timing is not perfect for you and you don't have to go and your business is still growing and performing well and paying you distributions, and you can handle continuing in through the next whatever period we go through, then you might want to hold off. On the other hand, if you check with savvy transaction advisors, investment bankers, and say, hey, I've got an engineering service company, or I've got a CPA firm, heck, any professional services firm. If you've got a software company with recurring revenue, if you're in certain parts of energy, yeah, that's right, I said energy, even though there's a lot going on in the Middle East. There are certain kinds of businesses that private equity seems to be hungry for. And if you have one of those kind of businesses, this could be exactly the right time to go. So check in with us, check in with your favorite investment banker. And if you don't have a favorite investment banker, check in with somebody in your Vistage or YPO forum and ask them to talk to or introduce you to a transaction advisor. Talk to them a little bit about your company. Ignore the first entreaties from them about how it's always a good time to sell or your business is hot or whatever else. Get some data from them. Right? Get a range of valuation. Any savvy transaction advisor is going to know what the market looks like for companies like yours. So get some data, talk to them a little bit about the market, talk to them a little bit about sentiment, and start to make your plan or hold back on your plan, right? But the right time to go is when you're ready and the market's ready at the same time. If you're ready and the market's not ready, you're going to go out at a lower valuation and you're going to get a worse deal. On the other hand, if the market's ready and you're not ready, your company might not get the higher valuation. So you need to pick that convergence point. If this is it and you're in one of those sectors, then regardless of what's going on out there, you're going to get a lot of cash for your business. So if we can help with that, go to candor-advisors.com. Click on the Talk to Kirk button and send me a little bit of information about your company, and I'll be happy to respond quickly. And we've now got Candor AI on the website. So if you don't feel like talking to me or don't want to be bothered with follow-up or anything like that, ask your question to Candor AI. What we've done is transcripted 200 plus of the videos that I've done in the past, and then we've walled off the large language model so that it answers questions as if it's me. In fact, it's arguably smarter than me because it remembers everything I've ever said. Feel free to go to our site, check it out. Thanks. We'll be back in front of you soon.